inflation, interest rate hikes, and a potentially looming recession. These are terms that no investor is ever keen to hear. Yet these are some of the buzzwords that have been dominating investor discourse throughout the financial markets. With oil prices poised to see a further climb in the coming weeks, inflation is set to reach unprecedented levels. There is pessimism and uncertainty, and the question on everyone's minds is, what can I do to hedge my portfolio against such high inflation? Despite such a bleak outlook, however, there is opportunity in adversity. The good news for investors is that their portfolios can be adequately hedged against high inflation with proper planning. A robust portfolio during such conditions would typically include stocks of companies that do not see their income being chipped away as a result of the broader economic disruptions, and is able to maintain a minimum growth that is above prevalent inflation rates. In this video, we will shed light upon the best stocks to consider parking your funds in that will help you sail through this sea of economic uncertainty. We present to you a list of the top 5 stocks that are ideal to be held during periods of high inflation. Up first is the global healthcare giant, Johnson & Johnson, which trades under the ticker JNJ. JNJ has historically gained the reputation as a go-to stock for investors during rocky economic conditions. In the last 6 months alone, where S&P 500 fell by nearly 8% in the panic-induced mass sell-off, JNJ actually climbed by almost 14%. JNJ's stellar balance sheet is a core factor that delivers confidence to its shareholders. It is only one of 2 American companies to hold a AAA rating, which is higher than that of the US government itself. The company is a clear leader in the various market segments it occupies, and has been reporting surging revenue growth, which had seen a spectacular acceleration since 2020. Although this was primarily due to increased demand for healthcare products in a pandemic context, it does indicate the capability of JNJ to thrive during periods of economic uncertainty. Moreover, healthcare demand is largely inelastic to price changes, given the critical nature of healthcare. The stock status as being a dividend king further adds to the reasons why it's one of the best options to consider during this inflation. Not only does the stock allow your capital to appreciate amidst rising costs, but also effectively offsets the purchasing power decrease through timely dividend payments. These features collectively make JNJ a win-win stock given the present climate. Next up is Exxon Mobil Corporation, the American energy giant, which is presently trading under the ticker XOM. The stock has been one of the most followed in the market during the present inflationary circumstances. With the S&P 500 falling by 8% in the last 6 months, XOM rose by a staggering 60%, and absolutely crushed the performance of the wider equities market, in a comparative sense. With the rise of oil, coal, and gas prices, investors are rightfully turning to the energy industry, which is set to see an increase in its profit margins. Given this potential to extract gains from an inflationary environment, there probably is no better energy stock one can opt for than Exxon Mobil. The primary reason we believe you cannot go wrong with Exxon Mobil is its robust and diversified asset portfolio, which enables it to drive down prices by a significant margin. In just its recent quarter, the company's discoveries in the South American coasts of Guyana pushed up its resource capacity in the region to nearly 11 billion barrels. Moreover, Exxon Mobil's significantly large scale of operations allows it to deliver unmatched earning efficiency, further driving down its direct costs. In the first quarter of 2022, the company delivered structural savings of over $5 billion, which it sees rising to $9 billion by the end of 2023. The ability to drive down costs amidst a rising commodity price environment can only mean greater profitability for its shareholders. XOM's dividend payments further make the stock a strong investment candidate to consider during periods of inflation, with the stock's yield standing at 4% at its recent payout. In addition to its consistently growing dividend payments, Exxon Mobil had further committed $30 billion to a buyback program, indicating the strength of its balance sheet. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Moving on, we look at the American Real Estate Investment Trust, Boston Properties, which holds the ticker BXP. The company is presently the largest publicly traded owner, manager, and developer of Class A office properties. In comparison to the 8% dip of the S&P 500 in the last 6 months, BXP managed to bring in a 3% gain. During times of inflation, the real estate sector is typically seen as a means for investors to inflation-proof their portfolios. This assumption is based on the anticipation of rental income to rise alongside other input costs. In the case of a REIT such as BXP, which specializes in Class A office properties, this optimistic anticipation stands ever true. The company holds a robust portfolio of over 200 properties that total nearly 53 million square feet. By focusing across the most high-quality office zones, it boasts some of the most impressive tenants, such as Microsoft, Google, Biogen, Salesforce, and various agencies of the United States government. Boston Properties Management is focused on a strategy that targets gateway regions, which possess long-term rent appreciation potential. With the recent remote working trend, the REIT has demonstrated its dynamic agility by restructuring to acquire more biotech lab spaces in order to achieve more optimal diversification. In the real estate domain, there's hardly a better option than BXP for investors to park their capital in during these rising inflationary tides. The fourth stock of our inflation hedging stocks is aluminum giant, Alcoa, which trades under the ticker AA. The stock saw its year-on-year EPS ballooning by almost up to 4 times in its latest earnings release in April 2022. Moreover, AA had experienced a 43% climb in the last 6 months, as compared to the 8% dip of the S&P 500. For a commodity stock such as Alcoa, the profitability margins growth that inflation brings is apparent. This can be gauged from the price it has charged in early 2020, compared to the first quarter of 2022. During this period, the company's price for aluminum charged has more than doubled, and is presently on the verge of $4,000 per metric ton. Inflation presents a pretty strong growth opportunity for AA, which is sensitive to the movements of global aluminum prices. Moreover, aluminum finds heavy use in the manufacture of electric vehicles, which is another rising trend observed in recent years. As one of the largest aluminum producers in the world, Alcoa is optimally positioned to turn big profits in this context. Shareholders would hardly find a better suited growth stock than AA, that would allow their portfolios to soar high in this inflation environment. Last on our list is the Canadian gold stock, Barrick Gold Corporation, which trades under the ticker GOLD. Seldom does one think of an inflation strategy and not consider the gold industry, given its reputation of being a great store of value amidst rising commodity prices. Gold has traditionally been seen as the ultimate hedge against inflation. For this reason, whenever financial uncertainty looms across the economy, the demand for gold surges. Perhaps this explains Barrick Gold's recent growth trajectory. In the last 6 months, the company had outperformed the S&P 500 index, boasting a price gain of almost 11%. Considering that the index had dipped by 8% during this time, Barrick's investors have thrived where others saw their capital come crashing down. To add to why we are so keen about Barrick's Gold, the company is potentially standing on the verge of immense opportunity. This seems to be the case after another successful round of drilling at the Donlin Gold property in Alaska. Following strong feasibility results, which point to a longer mine life cycle, Barrick has gone all in, enhancing its spending, along with its partner NovaGold, to levels unseen in the last 10 years. What is most impressive about these prospects is that the findings are based on only a 5% exploration of the company's total land claims. This ups the present value of the stock's growth potential to a substantial degree. If these opportunities are realized, we could be seeing the gap between its stock movement and that of the S&P 500 further widen. Inflation understandably rings alarm bells across the financial market, as it poses the risk of profit slowdown, reduced demand, and higher costs to maintain operations. However, certain investors in the market use these conditions to see their portfolios climb extraordinarily high, which is in line with the widely accepted view that there indeed is opportunity in these adverse circumstances. We hope this video helped shed light on some of the best stocks we feel are ideal hedges against the high inflation conditions presently observed. Before leaving, please like this video and share your thoughts in the comments below. For daily news updates on the stock market, you can also visit our website, stockstelegraph.com.